All right, hey everyone, we got some we were given some really big news. And what I'm going to do is I'm going to post a piece of copy underneath this video, and it is the single highest selling piece of copy that you're going to see for next year. And I'm predicting this, and the reason that I can say this is that the greatest copywriter on the face of the planet wrote it. A gentleman by the name of Jerome Powell. He is the Fed chairman, and he will be responsible for more sales in 2024 than anybody else in this industry. And the reason for that is at the FOMC meeting yesterday or day before yesterday, he changed some things that fundamentally affects the monetary environment and is going to have a huge impact across everything. And so I have Matt Warder here today with me to talk about the impact of this on the markets and why this is going to make FinPub fly in 2024. Matt, thanks for being here.
Hey, buddy. Thanks for having me. I appreciate the ability to have the conversation and to kind of get the word out because I think the outlook prior to Wednesday's meeting was very different from the outlook after Wednesday's meeting, and that's
Mhm.
sort of what we want to talk about here today, right?
Yeah, and so like let's just to give everyone a big frame. I mean, a lot of people I had already talked to in the last day or two have been like, whoo, like they're so happy. I talked to Andrew Taylor this morning, and he was like, man, that was a really good gift for all of us. But for anyone who's not quite clear, um, there's a big thing called monetary policy. I'm talking to copywriters, guys, you and me, you're my people. There's a thing called monetary policy, and it has a huge impact on everything in the economy, obviously, we all know. And so, Matt, how has the tight policy of the Fed in the last year and a half, the worst year of the in the industry for the last decade or more, um, how had that affected everything that impacted our sales?
Right. So, you have to sort of keep in mind that, interest rates for the bulk of most people's careers in the industry have been incredibly low. And then we went into, they'd started to rise, I think, when we hit into 2019, heading into COVID. And then, of course, COVID happened. Rates got pulled back to zero. And, the government, squirted out a whole bunch of stimulus into the markets, which caused inflation to run hot. And now the Fed is really combating the effects of those policy changes, right? That's why we've raised interest rates to combat the level of inflation. Now, inflation has gotten to the point where we're to a point where it's kind of steady year on year, and so the announcement on Wednesday, Powell basically took the position that okay, well we've kind of pushed back the initial impulse, so now I think we're to the point where we can begin to ease interest rates off, and they penciled in three interest rates cuts for next year, and that's pretty important because if you think about the period from the beginning of 22 until just a few months ago when they were raising interest rates was not a great period in the market, and when the market is volatile, choppy, and moving lower, it's very difficult for financial publications to go out and sell subscriptions unless you have a thematic package that is congruent with what the market's passing back. So now the Fed is basically saying we're going to ease back on this policy, and the markets have already responded here within a day of heading higher. We've seen small caps head higher. Some of the we've seen a rotation from higher, lower short interest, kind of lower beta stocks into higher short interest, higher beta stocks. There's people willing to take more risk in the industry, and also we're in the midst of uh, you know uh, what is a typical acceleration for consumer spending. Here as we head into the holidays, and of course, hedge fund managers and portfolio managers are cognizant of trying to lock in month-end gains, so they're reversing some of the positions that they've had, moving into other sectors, and that kind of correlates really well with uh, with the Fed's actions as well. All of this should be playing out in newsletter editorial, but only a handful of publications have really seen it come to the forefront.
Yeah. And so for everyone listening, just so you know, Matt knows that when he talks to me on the phone privately, that he has to dumb things down a lot more. And so he's talking to you guys like this because you're smarter than I am. But when I talked to him yesterday, the way that he's like, in his, I'm talking to a 5-year-old voice. He's like, John, when the market runs, subscription sales run, which we all know is true, right? And when the market's up, all of our sales are up. And what Powell just said is that the market is going to run. And so that's the first big piece of like great news I think we've had this year, frankly, as an industry, is that, hey, like fundamentally, the sales environment next year is going to be great for us. It's going to be better than it has been this year. Things have been picking up, and this is just going to make everything speed up more. And then from that, there's going to be a whole lot of knock-on effects, not just in terms of, you know, how monetary policy, flows through the market, what sectors it drives and things like that. And I think we're going to get into a little bit of that now too. But just that's the biggest piece of news. I just want to make it clear is like Powell's going to cut rates. Lower rates are going to drive the market up. The market going up is going to make sales go up. That means everybody's going to be making more money again. And so all that work, the grinding, the fighting, the the unfortunate cutting that has had to happen, everyone getting lean and mean and fighting trim this last year, like you're going to have a chance to come out and really kick some butt coming up here in 2024. And that's just fantastic news. And so that's why I wanted to do this video is like, it's been hard, but man, is it finally like there's some light here at the end of the tunnel. So with that, Matt, like how is this going to play out? Do you think, like, where do you think we're going to see some of the biggest benefits popping up from a newsletter standpoint in terms of things that we should be looking at selling?
Right. So we've already had, a period where, inflation has kind of begun to decelerate, right? So the market is still inflationary. Prices are still moving up. They're just moving up at a slower pace than they were a couple of years ago. And, whether you realize it or not, like that's a really good thing. When that sort of disinflation happens, when the rate of inflation begins to go from higher levels to lower levels, that is generally pretty good for markets because people feel like they can spend more money. So the themes that promotions can access that we can talk about growth. We can talk about kind of the next big thing, like this could accelerate searches for artificial intelligence or some of the themes that have been working here recently, right? Trading systems, call buying, option flow strategies, prop trading systems tend to work better from a sales perspective when when inflation is on the decline. Small cap services, anything related to natural resources or commodities, when there's disinflation and also with regard to natural resources tightness in fundamentals in the market, there's generally an impulse where we'll see those kinds of equities and commodities trend higher over time. And if you're on the right side of that in your publications, you're going to capture the reader's attention a lot easier, we'll just say.
Right. So, I mean, that sounds like a lot of things going up. I mean,
Mm-hmm.
is there anything that's not going to go up? I mean,
Yeah,
sector wise, that it's very clear that this isn't going to impact positively.
yeah. So first of all, let me show I'll show a correlation chart here. What I want to draw your attention to is this range down here, the correlations to the interest rate on the 10-year, right? If we're talking about interest rates, if interest rates are coming down, what's going to go up? So we need to look for negative correlations. So if we look at the S&P 500, it's very negatively correlated to interest rates. If interest rates come down, the S&P is going to go up. The NASDAQ, the Qs are going to go up. The Russell 2000, small caps, which are very, very negatively correlated to interest rates, are going to go up a lot, right? So you have a situation where small caps are probably going to outperform large caps. So if you have a service that's dedicated to small caps, this is a really good time to sort of go out to the market and try to sell product, right? Similar to that, like energy is in a situation where it might do better, it might do worse. Fundamentally, it's not set up particularly well. It has a positive correlation with interest rates, so I'm sort of tentative on energy. But look at gold. Gold has a very negative correlation to interest rates. So if interest rates go down, gold goes up, silver goes up. Copper, which is one of the materials that is in really dire short supply, and there's a mine in Panama that actually recently got shut down. A significant portion of global supply Um, Copper is in a fundamental situation where the prices are likely to go up. And if interest rates fall, the
Mhm.
types of investment that would benefit copper, think about data centers require a lot of copper, right? Consumer discretionary requires a lot of copper, whether we're talking about building buildings or alternately, cars or sort of big ticket items like that require a lot of copper. We've already seen Bitcoin take off. So the crypto services, if interest rates come down, crypto services are going to fare comparatively well. And that's just really kind of scratching the surface on the types of different asset classes that are going to benefit if the Fed does in fact continue on the
Mhm.
policy path that they've laid out here on Wednesday. Like all of those sort of subsegments, small caps, Bitcoin, gold, natural resources. These are all kind of pillars of the financial publication community, and opportunities for folks to actually go out and increase subscription rates or go out with new promotions or try to find things that'll work, that'll sell. And we haven't had that situation in the market for a good long while. So
Mhm.
um,
Yeah. And then,
get them while you can.
so we know those sectors go up. Tech is always a good one when things are good. Um, and how is this then on taking a slightly different tack? Like, how do you think this is going to impact the consumer spending?
Well, I mean, interest rates down. Well, let's just think about gasoline prices, right? I was talking about how energy is set up to, to fund from a fundamental perspective to not have such a great 2024, and it's positively correlated with interest rates. Well, if gasoline prices come down, that enables the consumer to go spend more, right? If you're spending less money on gas, you have more discretionary income to spend on other things, and that has an iterative impact on earnings, for companies that are involved in the consumer discretionary trade, and also that's a big component of options flows. To be fair, there's been a lot of flows this week in Macy's, which had a buyout offer come on, but also in higher short interest stocks like Kohl's and Nordstrom's and small cap companies like that. It's just indicative of a regime shift from higher interest rates to lower interest rates. And I think those things are going to play out, probably over the next 3 months, unless the Fed intervenes and actually changes their story, which is
Mhm.
important to pay attention to for everyone.
Right. Right. So generally, from a just across the board, though, it looks like this is a positive thing for newsletter sales. It also gives everybody who is like, hey, government spending's out of control, all that stuff, more feed for the, or more fodder to write about in terms of like uh fiscal irresponsibility.
Mm-hmm.
But it's great for newsletter sales, right? And that's the important thing. I'm pretty sure that's the reason. That was probably, it may not have been the number one reason, but I think it was one of the second or third top reasons that the Fed decided to do this. It was to make sure that FinPub had a good year this year. Uh,
That's right. I mean, I think it probably has more to do with the election than anything else. Like financial markets love stability. So if the status quo sort of remains, and keep in mind that the Fed and the Treasury have an interest in kind of maintaining, status quo and stability in markets, then that's generally good for for the S&P 500. It's generally good for the Nasdaq. So there is some motivation, I think, for actors in the space to support this going forward. Now that said, the reaction on Thursday, I think, was so violent that
positive.
they've already trotted out, one of the members of the board, Fed Williams, I think is who it was, has already come out and said, well, the cut in March that we're projecting is not necessarily cut in stone. So we are really path dependent, and they can change their mind. They will change their mind if inflation reaccelerates to the upside of those sorts of things. But like these are the types of issues that editors need to be tuned into and to be communicating to readers.
Mm-hmm.
And honestly, that's what's going to engage people here over the next few months. And moreover, if you prime your subscribership to be receptive to these ideas, to the extent that you have promotional ideas on the back end of it, generally, I think you'll have an easier time selling.
Yeah, yeah. And so it is. It's a two paths: risk on, risk off. Um, that is, you know, the basic environment that we've been in for quite a while is going to be risk on, risk off. And right now it's saying risk on. And like you look at all the charts and they look like there's this cliff popped up right at the, everything shot up. And so the Fed is kind of soft pedaling a little bit, like, hey guys, don't get too out of control too fast. But like this is definitely seems like throughout this election year, we're probably in a really good spot then.
Yeah, I think so. I mean, if you have to put it into like a buzzword, if rates go down, markets go up, and we all know when markets go up, subscription sales go up. So if you can just keep that in mind and keep an eye on interest rates and try to follow along with that story, there's not just a whole lot of editorial content you can pass on to your subscribers. It's actually going to be actionable and real, and is going to affect their kind of day-to-day operations as well. But also it's going to be interesting because as we head into what I think is going to be a pretty volatile election year, it's good to have themes to write about that can draw subscribers back into what the central themes of your product are, and that's it's just one of those things where the more tuned in you get, I think the more value you'll get out of your subscribership.
Right. So the headline here, everyone, is that the Fed moves to increase copyright royalties in 2024.
That's right. That's right. This is all part of the plan.
This is exactly the plan. I think that's why the Fed exists, right? It's all about copyright royalties. Awesome. So I'm not going to make this much longer. Like Matt, I appreciate you taking the time on this. I think this is just this is really good news, and we just wanted to kind of touch base and talk about it real quick. Matt's going to be down at FMS, right, in a few weeks or a month and a half.
Yeah, exactly. Looking forward to it. Honestly, just looking forward to being in Florida in January, if we're being honest. But anxious to get a chance to talk to everyone and kind of get a sense of how business is going. But I think, if we stay the course here, I think 2024 is shaping up to be a pretty good year.
Yeah, there's a whole lot of things besides just this that are pointing in that direction. But this was just like, I always say, like, the Fed basically it's like the chessboard, right? And right now the chessboard is working for us, not against us. That's awesome. That's great news. So with that, everybody have a great one. Like, go into the weekend knowing that this is good. There's good stuff coming, man. There's good stuff coming again. And so have a great one. And Matt, I'll talk to you shortly.
That's good, bud. Thanks.
Take care.